Uh, this is building on what we talked about in chapter 9 with budgets, and then adding to what we talked about in chapter 10 with variances, which are differences, right, between what our budget was and our actual. So remember, there's a difference. So there's always going to be a difference between what we budget and what actually happens. So that's the Lion King, and this is what happens in real life. Lions don't hang out with warthogs. This is what McDonald's tells you you're going to get. This is what it actually looks like. If you haven't watched the McMillions documentary yet, put that on your binge list. And this is what they look like on the internet, and then this is what they look like in real life. There is a difference between budgets and reality. Budgets are our fantasy, and we have to think about what really happened. So we record these as the differences between what we hoped for, our fantasy, and what really happened are what are called our variance reports. And if the variance, the difference results in our operating income being higher, we call that a favorable difference. If it results in our operating income being lower than what we had budgeted for, we call that an unfavorable difference. So if we're talking about revenue being higher than we anticipated, that's going to be a favorable variance, a favorable difference. If our revenue was lower than we anticipated, that would be an unfavorable difference. For expenses, if our expenses are higher than what we had anticipated, that would be an unfavorable difference. We spent more than what we had anticipated. If our expenses are lower than what we anticipated, that would be a favorable variance, because it's going to make our operating income be higher. Any questions on favorable versus unfavorable differences? Okay. And then what we also talked about in chapter 10 was this concept of a flexible budget. Well, we're looking at our master budget, and then we're going to adjust that budget based on the actual volume. So we don't want to change the amounts that we had anticipated per unit, but we do want to modify the unit so that we can pinpoint on what's the actual difference between what we expected and what actually happened. Any questions on the flexible budget? All right, so when we start looking at the differences between our flexible budget and what actually happened, there's two things that can cause, that are making up that difference. One is the quantity, okay, and the second is the price, okay, or the cost. So what we want to do is be able to look at that number and bifurcate or separate that out between how much of this is related to price, meaning that we spent more or less than we had anticipated, and how much of this difference is related to quantity, meaning we used more or less than we anticipated. Does that make sense? All right, so we have to start by understanding standard costs. So a standard cost is what is our reasonable expectation of what this product is going to cost us, right? So we're talking about direct materials, direct labor, and the manufacturing overhead. Now, when we're identifying what our standard cost is, we want to find that perfect balance between what would be ideal, so like in an ideal world, and then what's practical. An example that I could think of, man, it doesn't have a whole lot of relevance now because no one's really driving anywhere. But I think about my drive from my house to Las Positas. Okay? So, and I'm traveling from Alameda. In an ideal world, I'd get there in 23 minutes. In order for me to get there in 23 minutes, I've got to pretty much hit every light. Okay? I can't have anybody slow, like in my way, and most importantly, I can't deal with any traffic. There can't be any holdups or any traffic. If you've driven on 580, you know that there are bad drivers who should not be in the fast lane, but they are. Okay, so they're going to slow me up. And you know there's traffic always at some point on 580. Okay? So I also have to be practical in putting out this budget of what I think it's going to take me to get there, right? And so by putting that in there, this is my ideal situation, but this is the practicality of it, right? That's how I would figure out what time do I need to leave my house in order for me to get to Las Positas at a decent time. So companies are doing that type of analysis as it relates to their product. So you think of a product that's being made. We can look at I don't know what I want to use as somebody throw out a product that I can talk about.
A phone.
Dog toy.
A what?
A dog toy.
Dog toy? Man, all right. I don't even know what a dog toy is. I don't have a dog toy. Okay. I used to have a dog. His name was Chewy. He was murdered, but I don't want to go into that conversation. He was murdered by my younger cousin, by the way.
What happened?
Two of them, actually. Gosh, man, I don't want to bring it up right now. This is years ago. But anyway,
Just said a huge spoiler and gonna move along. I don't.
Yeah. It was traumatic, you know. So, and one of the two cousins, these are both my younger cousins, one of them, like a year earlier, I let him use my car, and my car caught on fire while he was in it, and he just ran off, and my car burned up. Anyway, dog toy. Pick a dog that thinks Chewy, may you rest in peace. Oh, and Chewy was kidnapped. Can you believe this? I had such a hard life. He was kidnapped. So, all right. Stay focused. A cone. I bought my dog Chewy a cone, and you put peanut butter in it. And the idea was, it was like this rubber thing, and he'd spend hours trying to get the peanut butter out, kind of keep him busy. So that cone was made of some sort of silicone plastic. And so I'm thinking of that as a dog toy, right? And so in order to make that, they needed a certain amount of silicone or plastic that they then can fold into the cone, right? And let's say that they were using 12 inches, 1 foot of cone, right? So what they would say, ideally, they'd cut it to exact specifications, right? If they had 144 feet or inches, they can use create 12 cones. But we all know that when someone's cutting things up, you don't always get it exactly to 12 inches, or you may need a little bit more than 12 inches, right? So even though they're only using 12 inches, they have to account for what are some of the scraps that are going to come off of this silicone plastic that we're not going to be able to use. That gets included in the standard cost. You also have to have labor. And for those of you that are blessed enough to still be working, you know that when you go to work and you're going to work for 6 hours, you probably don't work the full 6 hours. There's at some point when you check your phone, there's some point when you get into a conversation with a coworker that lasts 10 minutes longer than it should have. But even though management's saying it should take you should be able to complete 4 of these cones within an hour, they recognize that there's going to be natural inefficiencies there, right? So they have to account for that and say, okay, instead of doing 4 in an hour, do 7 in 2 hours, right? And kind of account for it that way. That's all those nuances come into play when you're determining what the standard cost is. Does that make sense? I'll do a better example. Let's see. So our product cost, you guys remember this, is made up of 3 things: direct materials, direct labor, and manufacturing overhead. And the manufacturing overhead is made up of 3 things: indirect materials, indirect labor, and other manufacturing costs. Okay? And as we've moved along in the chapter, I think this was introduced in chapter 2, or I think chapter 2, we found that we can take this manufacturing overhead, take those costs, and break them up between which ones are considered fixed costs and which ones are considered variable costs. So we have fixed overhead and we have variable overhead. So let's see here. I'm going to be bold. See if I can't transition over to the iPad so that we can talk about the bike examples we were doing in chapter 9. And we're going to use Charlie's Cycles as our example here. So just give me a second. Let me see if I can switch over. All right. And here we are. So with Charlie Cycles, we had a standard quantity, right? The only direct materials that we had were wheels, right? And we needed 2 wheels to create a bicycle, 3 wheels to create a tricycle. We also had to know what's our standard price. And so for Charlie Cycles, standard price was $3 per wheel. So if you were working on Charlie Cycles, you already know this information. And if you worked on one of the other 3, you can note this information down. So based on that information, if we want to calculate the standard cost of direct materials, and what is it going to cost us in direct materials for bicycles, that would be, nothing here, it's okay. It would be our 2 wheels at $3 per wheel. $6 of direct material cost. That's our standard cost for a bicycle. For a tricycle, it would be the 3 wheels times $3 per wheel, which equals $9. This is our standard cost. Yep, that's pretty much it. Questions? So to get the standard cost, you take the standard quantity and you multiply it by the standard price. Pretty straightforward. Oh, there it is. Now it's coming. Okay, go too far. So here's what we're going to do. Pretty much all I have to say about calculating the standard cost. Why don't we go in and I'm going to put you all in the breakout room and we're going to work on 11-1. So you have your book, physical book, or you can find the book online. Work on S11-1. So I'm going to put us into some breakout rooms and let you all work on this. I am told that this should take you 5 minutes. Publisher tells them it should take you 5 minutes. Work on S7-1. All right, so we'll go into breakout rooms. And they are now all open. Was going to be able to do a screen share for us to show us the answer for S11-1. Blow that up a little bit or zoom in for us a little bit. So
is it Control Plus or something like that?
Jeez.
oh, there we go. There we go. Thank you so much. So I mean, there's more direct materials here than there was in the wheel example, but you can see it's still what are all the individual ingredients that you have? What's the standard amount that you need? And then what is the cost per unit to get your cost per batch right here? $6.86. Any questions? Okay. Well, then let's talk about, thank you for sharing your screen, Thomas. Let's talk about the direct material variance. All right, so what our budget was and what our actual is, and we're comparing the flexible budget to the actual. And we're going to get a difference, right? Because there's always going to be a difference. There's always a difference between our budget and our reality. That difference can be broken down into two things. One is we're asking how much of that difference is because we paid a price higher or lower than what we had expected. That's the price variance. The other one is how much of this variance is due to the fact that we used more or less, that shouldn't say price, more or less of materials than we expected. Okay. So for example, well, I'll show you the formula. So for the price variance, now let me pause and say this. The way I lay out the formulas are a little different than how the book lays it out. And I lay it out this way because when you do the formula in this method, if you get a positive number, it's favorable. If you get a negative, it takes one step of extra thinking away, for me at least. So the price variance, actual direct materials that were assuming purchase and use are the same, and you multiply that by the difference between the standard price and the actual price. And for variance, you take the standard cost, what do we expect to pay, and multiply that by the difference between the estimated direct materials that were going to be used and the actual direct materials that were used. Let me show you all this. Okay, so we'll go back to Charlie's cycles. And oh, sure. All right. Bear with me. So if we were using, and according to the master budget, we're going to do 1,000 bicycles, 369 tricycles, right? So based on that, if we were to, our direct material costs were, it would be times $3 per wheel. Okay. So that'd be the bicycles, which would be $6,000 for bicycles. And then for tricycles, it would be $369 times the 3 wheels times $3 per wheel, 1,321. Okay. So our budget was $9,321. But we actually spent $9,708. Our variance, let's first do our flexible budget. And remember, the question we're asking ourselves here is, had we assumed that our flexible budget, that we were doing 950 bicycles and 300 bicycles, we would expect it to have. Yes. Okay. So here we're going to take 950 times 2 times $3 per wheel, 3 wheels times $3 per wheel. Okay. So 950 times 2 times 3 is 700 is 3375. So based off of this, 950 bicycles, 375 tricycles, and $75. But what we actually spent was 9,708. Are you guys with me?
How can you have like 2.3 wheels per bike and one?
Yeah, so here's how you would do that. For every, I don't even know how to do the math, but right, and so then I have to get another wheel out to put that wheel on there.
Yeah.
Does that make sense? Yeah, if I can, let's see, I can do it. 950 times 2.3. I have to use 2,185 wheels in order to make 950 bicycles. I used 2,183 because I kept picking up wheels, and the wheels, I don't know, they were breaking. They were square. I don't know. But I ended up spending more wheels than using more wheels than what I anticipated. Are there other questions?
Sorry, Professor, for me it's a little bit confusing. I don't understand what is this calculation that you did, like 1,000 times 2 times 3. This means that 2 means bicycle and 3 means is the dollar, and you come
Yeah,
out with
so 2 wheels.
6,000.
Yes.
Okay, then what is this? The other estimation that you did, 369 times 3. Oh, it means tricycle. Okay, the
Yes.
$3. Okay, got it. Yes.
And so we did that over here at the master budget. And then we also did it for the flexible budget. Okay. So we were expecting to spend $9,075, but we actually spent $9,703.
Okay, got it.
$9,708. So what's our variance?
The difference between actual cost and flexible cost? Okay.
Yes. So I hear somebody say 633. The difference between the 9,708 and the 9,075. Now, is this favorable or unfavorable?
Unfavorable.
It's unfavorable. And it's unfavorable because we spent more.
Mhm.
So here's what we can do this analysis and say, how much of this $633 is related to price versus so let me got this 630. Some of it's related to price. Some of it's related to quantity. So if we go back to that slide to get your price variance, actual direct materials times the difference between the standard price and the actual. So in order to figure out our actual direct material used, we take, as Alyssa pointed out, we had 2.3 wheels for every bicycle, and we had 950 bicycles. Plus we had 3.1 wheels for every tricycle, and there were 375 tricycles. You multiply that, add it up, that gives us 3, 4, 8. Give you a better time than that. 2.3 wheels times 950. 3.1 wheels times 375.
So so the 2.3 and the 3.1, would that be considered the actual direct material in this equation?
This 3348 is the actual direct materials.
Oh,
And the way you get there is you have to look at what was my actual wheels used times the total number of bikes, actual wheels used times the total number of bikes, times, or plus the actual wheels used for the tricycles times the total number of tricycles.
that makes sense. Thank you. And we haven't.
And then I'm going to multiply it.
No,
Sorry?
no. Continue. Sorry.
Problem. And then we're going to multiply it by the difference between our standard price, right, which is $3, minus our actual price, $2.90. That's this number right here, $2.90 per wheel. So 3348 times 0.010 gives us 335. And this would be favorable. So this is the price variance. But let's look at what the quantity variance is. So to do the quantity variance, we take the standard cost times the difference between our estimated direct materials and our actual direct materials. So let's figure out what our estimated direct materials were. I'm going to just push this up here so we have some room. So our thought was that if we were going to do 950 bikes, we would use 2 wheels per bicycle. And if we were going to do 375 tricycles, we'd use 3 wheels per tricycle. So this is 1900. 375 times 3 is 1,125. Which gives us 3,000 25. So I don't want to, I mean, I know I want you guys to keep up with the numbers, but I don't want you to get lost in the numbers. What we're saying here is if we were going to produce 950 bicycles, 375 tricycles, we would have expected to use 3,025 wheels. But we actually used, right, we kind of already did that calculation over here, 3,348 wheels. That was the 950 right here times the 2.3 plus the 375 times the 3.1. And our standard cost is $3. So the difference between this and this is negative 323 times $3. That is
$969.
thank you. 969. And because that's a negative, right, this is an unfavorable variance.
If you subtract those two, would you get the unfavorable result you got in the beginning? Like, do they lead back to each other?
Yeah, oh, you ruined it.
I don't know. I was just wondering.
I want to do the grand reveal. Okay, there's no grand reveal here. All right. So here's why we're doing all this, right? Because as a manager, as an owner, you're kind of upset, right, that you ended up spending $633 more than what you anticipated. Particularly when you produced less wheels than you had thought you were going to produce, right? But of that $633, $335 of that was due to price. Okay, so you actually had a favorable variance from the price, right? Because it was $2.90 versus $3. But then you had an unfavorable variance because of the quantity. Because you thought you were going to spend $3,025 over here, but you actually ended up spending or using 3,348. So like Alyssa said, if you take these two numbers and put them together, 335 minus or plus a negative 969 gets you, well, close enough, a negative 634, which is this number right here. I'm going to pause. I feel like you all should ask some questions now.
Is it safe to assume that if the cost is obviously $2.90 per wheel, if you know that, then you would assume that it would be the quantity that would be the difference, or where your variance would, most of your variance would be?
Yes. That's a very safe assumption. Other questions?
Are we going to try an example? Are we going to try to do this on a problem?
Yeah, we are. We are. Glad to know I'm very predictable. But before I do that, I want to ask you all a question, right? So think about what happened here, right? It's got a bunch of numbers sitting here, but what happened? can articulate what happened.
Are you saying with like the total with 969 or?
I'm saying, what does all these numbers tell us? Because remember, accounting, right, as you all like nailed in chapter 9, the Excel's going to do the formulas for us, right? But where we really make our money is in the interpretation of the numbers. So what? So what does this mean? So here's the story. The purchasing manager comes in and says, hey guys, I found a new vendor where we can purchase our wheels. And if we purchase our wheels from this new vendor, we're going to save 10 cents per wheel. We can buy in bulk, we can save 10 cents per wheel. And they go, wow, that sounds great. Let's do that because we want favorable variances. Or we know that we're going to have an unfavorable variance somewhere else. This can help make up for that difference. But what happened is the vendor that they ended up selecting had a lower quality, right? And so now you're looking at these wheels, but these wheels aren't fitting right. They're bent. Maybe we ended up buying aftermarket wheels, or maybe we ended up buying secondhand wheels, right? But we ended up where we thought we were going to save a lot of money. We have to end up using actually more units or materials in order to reach our production levels. Does that make sense? Because I'm always willing to, I acknowledge, I'm sure you all do as well, that if you pay a lower price, you're going to get a lower quality, right? And in certain instances, I'm willing to accept lower quality in order to save money. But then you have to ask yourself, is the savings dollar-wise really worth it? Because am I using up a whole lot more of the material in such a way that I probably should have just stuck with the my original vendor? I just had another example, but it's gross, so I'm not going to say it. All right. So department in general, I decided that they'll be online. So Jennifer agreed to share her screen with us so that we can see. I don't know if you want to walk us through it.
I forgot I was on mute, sorry. All right, so for the price variance, here, let me see if I can do this. I can keep that there. I don't know what it looks like on your end. Do you see the Pearson text here?
No. You can usually
No.
only share one tab at the same time,
Oh, okay.
fortunately.
Doggone it. Okay. So I took for the price variance, I took the 87,500 pounds of clay that they actually purchased. And then you take the price variance. So the standard cost was $1.96, but we ended up spending $1.92. And I got the $1.92 by dividing the total cost, which was 168,000, by the amount of pounds, which was 87,500. So I got the $1.92. So it's a 4-cent difference, and you multiply that by the amount of pounds, which gave you a favorable $3,000 3,500 variance for price. And then for quantity, kind of flip-flop, and we discussed this in our group, that to think about the quantity, you would actually use the standard cost, which was $1.96, and then multiply it by the difference between your actual direct materials and your estimated direct materials. So we multiplied $1.96 by 3,500 and got an unfavorable variance of 6,860. So then taking both of those variances gave us the total variance, which would also be unfavorable, of 3,360. Is there a consensus? Everybody else get that answer?
Pretty sure that's what our team got too. It was some 6,060 and 3,360.
Yep, for your total variance. Okay.
Any questions for Jennifer?
I can hear Chantel barely.
Oh, is there a question?
It was me.
Oh, okay. Was someone knocking at your door?
I'm on mute.
Oh. All right. Well, thank you for sharing your
Yep.
screen. Story there, right? So they spent 168,000. They have budgeted to spend dollar. Let me just do the math real quick. $96 times 4 times
Sorry, shared it. And then, there you go.
160. No, it's all right. They have budgeted to spend $164,000. They ended up spending $168,000. Right, so it's about a 2% difference. But may have found a less expensive vendor. Right, so now okay, let's stick with this vendor. So let's find a way to be more efficient in our quantity. Right, so that we can do something like that. But it's understanding what that $3,360 means and breaking it up so that you can go back to the manager, the owner of the business, and provide some insight. We're talking about the difference between a bookkeeper and an accountant, right?
So would they use these numbers, these variances, when they budget for the following quarter or next year? Say, like, they realized this quantity variance is always unfavorable. Would they adjust then their budget for the following? Are these numbers that you would use for that, or would you just want to know why there's such a difference or what happened? Because it could be a lot of waste to, like, maybe they could scrape out more of the clay or would not use as much.
No, what they're doing, no, you're absolutely right. So they're going to use this information to influence what their next budget's going to look like.
Okay.
They're not necessarily going to say, all right, it's $1.92 going forward, because we have to ask the question, how did we get to this $1.92?
Mm-hmm.
Did we get a new vendor? Did we do a volume discount purchase? Was our original vendor no longer available? So that maybe that's why this month we have to pay more than what we paid. On the quantity, we didn't account for the heat and the impact it would have on the clay and our ability to scrape the bottom, right? So some things they go, yeah, we were inefficient. We can be more efficient, and so let's start original 24 pounds, or they can say, you know what, it's 24.5 pounds. Let's correct that going into the next month's budget, next year's budget. So it's about gathering information, right, so that we can make informed decisions. All right. How about let's take for sharing your screen, Jennifer. let's take a 10-minute break, and then we're going to come back and we're going to do some more variance discussions around direct labor. All right, so we're going to take a 10-minute break, and then we will be back.
Lab
I'll
tonight?
put a timer
We have
on the
like a-
screen for us.
Are we staying
Excuse
for
me?
lab tonight? Okay, okay.
right, everybody. It is about that time. Can you all let me know if you can still hear me?
Yeah.
Yeah, I can hear you.
Okay. Excellent. All right, so let's continue our conversation on variances. Okay. So we talked about direct materials. Now we're going to talk about direct labor. Now, I'm just going to tell you off top, this direct labor kind of works the same way as the direct materials, right? We have to think about when there's a difference between our flexible budget and our actual costs, how much of it is related to price or rate, and how much of it is related to usage. And by usage, we mean direct labor hours. So, and here, oh, did something I shouldn't have done. All right, here we go. Back to Charlie cycles and the standard quantity of direct labor. All right. Charlie Brown minus, go around. All right, thank you. Okay. And, all right. Thank you. 4 hours for a bicycle, 4 hours for a tricycle, and for Charlie companies, it was $9.50 per hour. Strikes or bad spikes. You may have had a different, well, you may have had a different direct labor. You definitely had a different standard cost. Okay, but we're just going to focus on Charlie cycles. So again, first thing we have to figure out is what's our standard cost for every bicycle and every tricycle that we make. What do we expect to spend in direct labor? Right. So for the bicycle, oh, here we go again. Okay. For the bicycle, it would be 4 hours at $9.50 an hour. That'd be $38. For the tricycle, because it's still 4 hours, right? It's still $9.50 an hour. It'd be $38. So the standard cost for direct labor for bicycles and tricycles would be $38. Now, I do want to say one thing. We could have used different amounts for bicycles and tricycles, right? If the tricycle is more complicated, maybe the bicycle takes 4 hours and the tricycle takes 4.5 hours, right? So they don't necessarily have to be the same amount. The other thing to keep in mind is they don't have to be the same rate either that's being charged, right? So we could say $9.50 per hour for the laborers working on the bicycle, but because the tricycle is more complicated, we're paying those employees $10 an hour, right? So we don't necessarily have to use the same rate, right? All this comes into the budgeting. And also keep in mind that the amount that we use is what's called the fully burdened rate. Okay? So in other words, we're not paying the employee $9.50 an hour. They're probably making $8.25, $8.75 an hour. And then we have to cover their payroll cost, any benefits that we're offering them, et cetera. But all that gets added into this fully burdened rate of $9.50 an hour. Let's see here. I think it's time to do another exercise. Oh, questions? I'm sorry. No?
Seems pretty straightforward.
Yeah, I think it is pretty straightforward. Well, then let's do S11-2. I'm going to open up the breakout rooms. You can go back into your breakout rooms. And if you
Is it
kicked out or whatever, just remind me where you are. It's S11-2.
-2? Okay,
And I'm told this should take 5 minutes.
got it.
That's what the publisher tells me.
Okay.
And Suki, remind me what group you were in.
2.
I think you're in 2.
Yes, sir.
So you all go back to your breakout rooms. You, Michael, Abby, Christian, Mason, Brigitte. We're all back into our breakout rooms for 5 minutes to work on this problem. You need to be reassigned, Michael.
Yeah. Sorry about that. I don't know what's happening.
No need to apologize. You are in 6.
Thank you.
Yep. Mason, Abby, you all can head over to your, they're waiting for you. He said they can't start without you.
So for 11-2, this is what we came up with.
Yep. Pretty straightforward.
Yep.
Who's Zoe? This is your screen. Would you be willing to share this in the main room?
Yeah, but I mean, I don't know. I wouldn't be the right person to explain it because I'm still kind of confused about it. But yeah, I have no problem sharing.
Oh, well, you've got 2.5 minutes to figure out how to explain it. All right. Hello, Thomas.
Hello.
Hello.
And Maria. And
Hi.
and Jenkins.
Hi. Hi, Professor.
So are you guys a little disappointed that it was this easy?
No, I'm happy about it. I'm very happy.
Excellent. Well, we're going to get back together in the main room in like 2 minutes.
Okay. Is it right though?
All
Yeah.
right. Hello, breakout room 9.
Hi.
Hello.
Tuesday, Thursday, or Monday? Hi.
Hello. We all got to $5.13.
Excellent. That's what I got as well.
Okay.
Right.
So
Well,
we go
you
back
guys
to
back
the
main room in about a minute and a half. I'm gonna shut these rooms down. So, if you guys want to talk or to each other or whatever, everyone's coming back to the main session.
Yes, we are.
And Zoe has agreed to share her screen with us. Give it about 20 more seconds to get the rest of the folks back in here.
Do you want me to start?
Yeah, go ahead.
Okay, so what you see on your screen, so the workers, they get paid $20.50 per hour, and it takes them 0.25 hours to produce 10 pounds of fudge. Now you take the hourly rate, which is $20.50, and you multiply that by the number of hours it takes to produce the fudge. So $20.50 times 0.25, and that gets you $5.13 per batch.
Are there any questions for Zoe?
Nope.
All right. All right. Thank you, Zoe, for sharing your screen with us.
Yeah, no problem.
So let's talk about the direct labor variances. And again, these variances can be separated, or this variance can be separated between the direct labor variance and the variance. So the rate variance is saying how much do we expect to pay versus what we actually paid. Okay, so how much of this variance is due to the fact that we ended up paying our employees more or less than we anticipated. And to calculate that, you take the actual hours that were used, multiply it by the difference between the budget rate and the actual rate. The other piece to this is the efficiency variance. How efficient were our employees? More efficient than we anticipated, less efficient than we anticipated, meaning they spent more or less hours than what we had planned. To get that, we take the standard rate, okay, which is the same thing as the budgeted rate, and we multiply that by the difference between our estimated hours our budgeted hours, estimated hours, and our actual hours that were used. Any questions on those formulas? So let's look at an example here. Oh, there goes that guy.
Are the formulas going to show up again on your page? I didn't finish writing them all down.
They were not.
Okay. What was the efficiency variance formula? Do you have that off the top of your head?
I have nothing on the top of my head. Yeah, listen, I've made a point to not put any of this stuff into my memory.
Why not?
Because I get it out of a textbook.
Oh.
And this isn't a cool party trick, you know?
Takes up way too much space.
Yeah. I want to remember things that are like cool part, like quotes, and people go, "Wow, he's really smart," you know, or a song, you know, lyrics to a song.
Star Wars.
Star Wars. how to get home, my kids' birthdays, stuff like that.
Probably remember your wife's
anyway,
birthday.
Are we done?
Yeah, I'm good.
Yeah, my wife's birthday was. Yeah. I'm not gonna forget that. All right, so now we gotta watch this thing happen again. Just afraid to touch it because. All right, there we go. He's gone, and so here, right, we have our master budget. Right, this is from Charlotte Cycles in chapter 9. We said we were going to do 1,000 bicycles and 369 tricycles, right? Our direct labor would have been 1,000 bicycles times 4 times, I think it was $9.50, right? So 4 hours times $9.50. So we would have expected to spend $38,000. That was our original budget, our master budget, just on bicycles. Tricycles, 369 times 4 hours times $9.50 per hour. That is $14,022. Okay. If we add those up, that gives us a master budget of $52,022. Okay. So this is what would have been in our master budget. What we want to compare is our flexible budget. Knowing that we only had 9,500 bicycles, right? And I'll just shorthand it at $38 per bicycle. That's $9.50 times $4, and then 375 tricycles at $38 per tricycle, 4 hours times $9.50. We would have expected to spend $36,100 on bicycles and $14,250 on tricycles. So our flexible budget is $50,350. Just adding up this number here and this number here. About the numbers so far. Okay. Well, we actually spent $50,856. And so our variance is $506. Is that favorable or unfavorable?
It's favorable.
Favorable.
You spent less than what you're,
You're spending less. We're spending less than the master budget.
right, so that would be favorable.
Would it be unfavorable since we're comparing it to the flexible?
Yes, we want to compare it to the flexible. So here's the thing, guys and gals. Once we know what we actually did, we don't even need that anymore. Because what we want to compare is what we thought it would be at these amounts versus what it actually was at these amounts. That apples to apples comparison. So this is actually unfavorable because we expected at this volume level, we would have expected to spend 50,050, but we actually ended up spending 50,856. Questions? So if we go to here, we can take this 506 unfavorable, and then we can break it out between how much is due to the rate and how much is due to the efficiency. Okay. And so for the rate, we take the actual hours used times the difference between the budgeted rate minus the actual rate. So the actual hours used, we had 950 bicycles, and it took 3.8 hours to do those, right? Less than our 4. But we also had 375 tricycles, and that took more time, 4.5. Okay. And just to be clear, those numbers are coming from those numbers are coming from here. Okay. 3.8 and the 4.5. Not this. This. 3.8 hours for the bicycle, 4.5 for the tricycle. And then we're going to multiply that by the difference between our budgeted rate, which was $9.50, minus our actual rate, which was $9.60. And that $9.60 is coming from right here. I trust you guys are going to slow me down if I'm going too fast. $950, 610, 375 times 4.5 is 1687.5, which gets us to 5,297.5 hours. And then we're going to multiply that by 950 minus 960, which is a negative 10 cents. So our rate variance is, let's just round it to $530, and that would be an unfavorable variance. Pausing for questions. Okay, I'll move to the efficiency, which is the standard rate times the estimated hours minus the actual hours. Okay. So here, our standard rate was $9.50. And we multiply that by our estimated hours. I'll just kind of do that math down here somewhere. And if we're doing 950 bicycles times 4 hours, and then 375 tricycles times 4 hours, we would have expected to spend 3,800 hours on bicycles, 1,500 hours on tricycles. That's a total of 5,300 hours. Okay. So our estimated hours is 5,300, but we actually spent, we already did that math over here, 5,297.5. Okay, so we spent 2.5 additional hours. 950 times 2.5 is, let's just say, $24, and that would be favorable. And it's favorable because we estimated that we would spend 5,300 hours, but we spent less. We only spent 52,907.5. Alyssa, would you like to steal my thunder again?
Oh, I'm good. I keep sneezing. That's why my video's off. Bad allergies, so I'm good about it.
Yeah, man, I got allergies. It's a bad time to have allergies. You don't want to be outside and sneeze. People will throw a red scarlet on you.
Yeah, no, I went on like a big bike ride. It just made it way worse. So yeah.
All right, this is going to be anticlimactic, but look at this, you guys. The 530 favorable gets this, right? 530 negative 530 plus 24 positive equals a negative 506. Confetti. Questions? Okay, well, then I'll ask my question. So we see a lot of numbers in front of us. What's the story? What do we tell Mason's dad, the owner of the company?
Do we tell them that we're paying the workers too much per like what we're producing, but like no, but then they're still efficient, but it's unfavorable for the rate variance?
Yeah, it's coming together. Yeah, I like it.
Have them work less hours. Would that be it?
That could be it. Yeah. So here's the story I'm seeing, right? And there's lots of stories. Maybe we hire some new seasonal workers, and it cost us more money to hire these workers, but they're more experienced because they're able to do the work in less time. And if we assume that this was their first month doing this, what do we expect to happen next month? Right? They should become more efficient. So in the long run, this could end up saving us more money if we can get to the point where our additional amount we're paying is saving us money by having less hours spent. Questions?
Didn't it take them more hours because we were estimating it to only take 4 hours, but it took 4.5 for the tricycle, and then the bicycle was a little bit less, but overall, wasn't it more?
Well, overall, it was less.
Oh.
Right, that's these numbers right here. We estimated 5,300, but in actuality, it took 4,297.5. But I like your thinking there, Jared. Maybe going into the next budget, right? To Jenny's question, we can budget for less on bicycles, and maybe we should budget more on tricycles. Because it kind of stands to reason that if your tricycle should take more time than the bicycle. It's, I don't know, three-wheel versus two.
What other things make the rate change? Because wouldn't there be a steady rate, and that shouldn't fluctuate that much? I know you said seasonal people, so, but wouldn't the what you call it, the fully burdened rate be the same for everybody? Or how? I don't understand how the rate changes, I guess.
Yeah, so thank you. That's a good question. That fully burdened rate is an average, right? And so that's an average of the 10 people working there, right? But maybe we decide to give one person a raise, right? So it makes the average change. That rate could be assuming that Ronnie, Bobby, and Ricky are going to be working there next month, but Ronnie leaves, and now it's Bobby, Ricky, and Mike, and Mike's more than what Ronnie was. It could be a change in the tax rate. So our tax rate that we have to pay has gone up. It could be overtime, right? Maybe instead of 3 people doing the work, it was 2 per. Right? So there's lots of reasons why
that makes sense. Okay.
All right. So we've got one more thing, and Jared, I don't know if you want to steal my thunder on this one. I'm a pretty predictable kind of guy.
We're doing a problem.
Yes, sir. We're going to do S11-6. And we're not going to come back to the main room. So once you're done with S11-6, you can just invite me into your room, and I will make sure you got it right. And if you have any questions, you can ask. It's S11-6, and the rooms are now open.